All right, everyone, and welcome back. We're on the charts. We're going to start searching for some equal highs. But before I get started, I'll give you guys a few seconds to try to identify the equal highs yourself. All right, now remember, the left must be bigger than the right. Don't forget that. This is how we identify a equal high and make it valid. So we got equal highs right here. You see that? That's the structure point. So there's that one, so that's not equal highs. We got equal highs right there. Now they're not perfect. The market is fractal. Don't forget that. So equal highs there, equal highs here, equal highs right here, equal highs right here. Let's see where else. Equal highs, equal highs. You see that? It's building up that liquidity for the future, giving the market a reason to start going up. And what is it leaving behind? Equal lows, exactly, because it needs a reason. Equal highs. Let me check this one. That's not equal highs. That's a strong high. Nope. Okay. Let's go over here. We got a somewhere relative equal highs right there. The market in the future comes and takes out. You see that? Took it out in the future. Gave it a reason. We got some equal highs here. Gave price their reason to go up higher. Equal highs there. Yep. By now, you guys get the point, right? Equal highs are only valid if the left is higher than the right. This is how we use equal highs. Pretty simple and straightforward. That's it for now. On to the next one.